Hey listeners, today we had on Santiago Santos, the founder of Inversion Capital and the co-host of another Blockworks podcast, Empire. His fund is doing this interesting thing where it's looking to acquire businesses it thinks could be run more efficiently with crypto rails, and then adding the crypto parts itself. We get into crypto onboarding, as well as Santi's thoughts on Solana, old ideas that should be retried, and a whole bunch of other stuff. If you want to hear more from Santi, he'll be at Blockworks Digital Asset Summit in New York, which is right around the corner in March. Use your code Lightspeed10 to get 10% off your tickets at checkout. Let's dive in. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, and we're dipping a bit into the Blockworks cinematic universe today, bringing on Santiago Santos, co-host of Empire, which is our general kind of crypto podcast. Jason Yanowitz, co-founder of Blockworks, is also a host. It's a great listen. So if you like this episode, go check them out. Santi's also the founder of Inversion Capital, a really good follow on Twitter. Santi, thanks for coming back on Lightspeed.
Thanks, Jack. Last time I was here, it was a similar time, actually, a year ago. And yeah, it's great to be back and, happy to dive in.
100%. Yeah, it's kind of crazy. It's been a year and a half of Lightspeed. I remember when they were launching it, I was not the one doing it. It was Garrett back then, but pretty cool to see how far things have come. And yeah, we're recently having a string of like return guests, which is kind of fun. So
there was a moment last year where Lightspeed, in terms of popularity, was much more listened to than Empire. And I'm like, okay, this is quite interesting. And obviously it is a signal of what has come out of Solana, and really Lightspeed was born in the depths of the sort of despair of the Solana ecosystem, and then really kind of grew in tandem with it, and it was just really, really nice to see.
Yeah. The launch of Lightspeed was timed well. Mert is also a great co-host, so give him a lot of props. But
absolutely,
Santi, for today's conversation, I want to start with a little bit of a complex question, so indulge me on this one. But I think it's a good window into just more broadly some of your thoughts about crypto and adoption. So as we're recording this, it's been roughly 3 weeks since the Trump meme coin launched on Solana. And this morning I was just looking a little bit into, okay, where are the usage metrics at? Because I think one of the takeaways a lot of people had was, wow, this is a huge onboarding event. People were dying to, get USDC onto Solana so that they could buy this meme coin. And it looks like that thesis of a huge onboarding event maybe hasn't entirely panned out. So Solana's real economic value, which is a measure of tips and fees used to transact on the blockchain, kind of a demand metric, that volume is now returned to pre-Trump levels on a weekly basis. DEX trading volume is about the same. The one notable difference is that stablecoin supply jumped a lot, and it hasn't really declined. It's just continued to increase. So those stablecoins have really stuck around.
Mm-hmm.
But, when we talked about the Trump meme coin as a potential onboarding event, 3 weeks in, do you think that has played out or that hasn't played out? And what are the lessons? What can we learn from that about crypto onboarding more generally?
Great question. It's very top of mind. Look, it's a pivotal moment in the industry. The Trump administration, the 180 from a regulatory standpoint, the just willingness for the president to launch a meme coin cannot be understated. The second part of the question is very interesting. Certainly there were like 500K users that came through Moonshot. There was 100 billion of volume in the span of like 24 hours plus. When Tolly talks about NASDAQ on the blockchain, I mean, that's what you're seeing. So all of that, I think, is incredibly encouraging. The infra and how it held up, trading volumes, capital efficiency, all of that, I think, is very positive. Every stress test, especially of this magnitude, is very instructive of how you see a path towards tokenizing stocks and real world assets and moving in that direction. I think unequivocally anyone that is critical of that, I think, is missing the point. The onboarding question is a fantastic one. It's one that I've been thinking about a lot. It relates very closely to what I'm doing at Inversion, and it validates my singular focus right now, which is we have a broken funnel in this industry. If you came into this industry because you wanted to buy Trump coin, you went in through one of these exchanges, you transferred funds, it was difficult, still is on the margin, and you had a very traumatic experience. Trump was at its peak $70, now it's out down to 15. It is a very volatile coin. It is and should be a volatile thing. All of these assets are in price discovery. You've heard me in this podcast and others. I'm not critical of meme coins. I'm not dismissive of them. I'm not dismissive at all of speculative energy. Every technological revolution requires speculation and that energy to onboard users and fund investments. Where I just struggle is it's the only funnel. And the retention's not there. Dragonfly, Rob at Dragonfly produced some really interesting metrics around what's the retention of that user. And I think anecdotally, but also looking at the data, you just realize that most of those users, A, are not sticking around, and B, are not producing more economic value on chain. And then you contrast that with, well, why not, right? I mean, there are useful services. There are other things that user might want to do. And I think of two things, DePIN and stablecoins. Like that user could be buying a mobile Helium, like a Helium plan. That user could be serviced a more comprehensive, you talk about stablecoins, like, yield bearing checking account, which is sort of a checking account and a money market account. And to me, there's a lot of opportunity that is left on the table when that mass onboarding event happens. And I just think we can do better. The retention's not there, and that funnel will always be there. In the same way that users onboard to traditional markets. The thing about crypto that is very unique is that it's sort of a little bit of everything, right? You have capital markets and moving at the speed of light, 24/7, 365, digital casino, and most of the fees happening on chain today come from that activity. I would hope and I would want that over the next 5 years, the percentage of fees that come from that type of activity goes down. Not because in the aggregate fees and activity goes down, but because we really focused on creating a new funnel to onboard traditional businesses, onboard traditional users, that the activation, their first experience with crypto is not a meme coin that is so volatile, but more so being serviced a core product and service like a mobile plan or an internet plan or just a pure banking account that is tokenized dollars with yield. And I think if we do it that way, the retention will be higher, the LTV of that user will be higher, and the sheer like economic activity that is happening through the chain is fundamentally like an order of magnitude or two higher. I think we can get there. The infra is there. It's more of the go-to-market that's broken.
Yeah, that's interesting. I think as I sit here and look back and do this Trump coin retrospective, I think at the time it was talked about as this thing that would have much more legs than it did. And who knows, maybe the team behind it has some plans down the line, but you really could almost compare it more to like the Super Bowl or something. It's an event that everyone tunes into, and you're trading it for one day, and then people mostly forget about it. And there were all sorts of, I don't know, protocols tripping over themselves to let you collateralize loans with Trump or whatever it is, because there was this thought that it would be a much longer term event. But to the Rob from Dragonfly point, I just think that a meme coin demand event has to inherently be short term and low retention. And so when you bring up DePIN and stablecoins, like why is that the top of mind direction as far as how you have like a longer term type of onboarding?
Oh, because imagine two scenarios. One, we just described the Trump coin trauma event. At best, you make some money. At worst, you lose a lot, or you go through this emotional roller coaster. The second one is, imagine you, Jack, need a mobile service. We all do. And you discover Helium in the US, and that is at feature parity or a better service than a T-Mobile, a Mint, Sprint, whatever other AT&T, Verizon. It's a feature parity or better, it's cheaper, and it provides the same type of coverage, same type of service. And you walk into the store, you buy that plan. And then in that experience, you then discover stablecoins because you can on-ramp easily and off-ramp. And you can you can top up data or buy your data plan with stablecoins, and it might be marginally cheaper for you. And then you start discovering the power of stablecoins, and you see that stablecoin is earning some yield. Some of that is USDC, like on Coinbase, is giving you 4% or whatever, or some of the other flavored stablecoins. And it all happens very natively through your phone, which you're checking 24/7, 365. And then from there, I mean, at a minimum, you're being serviced a core product and service. And then that really sets the runway to activate you, Jack, as a user on chain. But you never start with crypto. I never tell you about crypto. I don't need to. I just need to make sure that core service, the mobile plan, is a killer product. Like, drop the crypto kind of component to it. And I think that's where we are headed as an industry. Like, the end state of this technology, it's invisible, but it's felt by the user. It's faster, it's better, it's cheaper, or it's felt by the business because it can streamline a lot of the operations. Like, and I think that activation for you, Jack, is more powerful. It's more enduring. Like, you need to have a mobile plan. You may or may not be sophisticated in terms of how you manage your personal finances. Neobanks have really, over the last decade plus, have tapped into a younger demographic, have made finance less of an anxiety-inducing experience. Go look at JP Morgan earnings report. So over the last 3 years, you would be shocked at the percentage of deposits in checking accounts that were not swept into a money market account. Someone might listen and be like, I didn't understand any of what he just said. I'll make it very simple. There is billions and billions of deposits, not a small amount, that was sitting in a checking account earning 0% interest, being inflated out. All they had to do was click a button, deposit into treasuries, which is kind of the safest thing, to capture 5% yield. And I'm here to tell you that a vast majority of depositors did not do that. In a world where they're constantly hearing about high interest rates, it's just staggering, and I think that's really the beauty of crypto, is that you have this idea, this concept of programmable money combined with AI. There's a lot of buzzwords, but the killer opportunity here is to really automate and abstract. Forget about crypto, just the finance journey of a user. Like, no one's here checking their JP Morgan Bank of America account 24/7, 365. We shouldn't, as an industry, assume that that's ever going to change. I know we'll talk about it later in this pod, but some of the worst mistakes that we can make is assume that because this technology is wonderful and super powerful, core consumer behavior is going to change. I don't think we should ever assume that. And I think if we start from that, first principles, it allows us to just create better products fundamentally that just produce a better experience than your JP Morgan or your Bank of America or your Revolut or whatever. And we have that. The tech is very much ready. I couldn't have told you this with a straight face 4 years ago, but the idea of programmable money to then do money working for you on chain is super powerful. And I think that the 1-2 combo of DePIN or something like Andrina, like internet, these are products and services that you, Jack, need. And I think that's just so powerful because it sets you up more to have a more deeper relationship with the customer, and then servicing them other things. Now, you, Jack, as a parting thought, I'll close this. Of course, if you, Jack, are interested in the Trump coin then and there, nothing will stop you from doing that. But you'll come back to mobile. You'll come back to using stable coins. And it's just a different, psychologically, there's less trauma in that activation flow. You know what I mean? It's almost as if your first interaction with the internet was I don't know, I'm trying to think here, but something very dramatic versus email. You know what I mean? Email is so powerful because you created your Gmail account. I remember the time where I first created my email account. Gmail came around and you had Hotmail and stuff, but Gmail was so clean, so powerful. And then everyone's like, wow, I can have this at home. I love email because I can communicate with people at school and coworkers and friends. It was just like a very ingrained, embedded service that came and just really took over kind of your day to day in a very powerful way. And I think crypto will do that at some point. We just haven't been able to crack that nut because of this, pure speculation approach.
Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. The Helium point is a good one. I'm honestly surprised Helium hasn't grown more for what the product is and how clear the value proposition is, at least in my view. Like I personally am a Helium user. I have been since they released the $20 plan because I like saving money. And at a baseline, it's T-Mobile, if not a little more connective. And I also get paid to share my data, which, not everyone may opt to do. But in my view, my data is being stolen either way. In this case, I get paid for it. And many months, my cell phone plan is actually entirely free. So DePIN is often spoken about in a very kind of, wishcasty kind of way with in 10 years, all nuclear energy is going to be on this shared grid or whatever. But Helium does in fact exist. And I don't know if they're actually making money and they may need to raise prices at some point to turn a profit as a business. But it's amazing to me that it's not more adopted. I think this might be off, but I think the most recent stat I saw is 130,000 subscribers, but that also includes unsubscribes. So somewhere under 130,000 subscribers to that network seems low for what the product.
Yeah. I agree with you. And look, I've had these conversations with a lot of deep end projects that I've invested in or have talked to, and is help me understand why this doesn't have 10x more the number of users. And it's a go-to-market problem. Again, you need to have go-to-market muscle. It's not, sometimes the best technology doesn't win. Mint Mobile is an example, which is Ryan Reynolds, the actor's MVNO, has gotten a lot of traction because, it's Ryan Reynolds. He's a recognizable figure. People like him, he's, and that's really the two main costs of a mobile service is the data costs, which Helium Network is incredibly powerful now that there's offloading. But also you need to have the go-to-market. You need to have boots on the ground, I'll tell you maybe a controversial take. I think there's a protocol out there that people don't like as much, but has done an incredible amount of boots on the ground evangelization of stablecoins. You know why there's a reason why Tether is Tether? Tron.
Yep. Yeah.
And your listeners might hate hearing that, but I'll give credit where it's due. And I think there's something just so instructive about the idea that Justin had, which is, hey, there's this really thing called Tether. The world wants dollars. And he's really just driven that, boots on the ground. And so, I love the industry skewed heavily towards building core infrastructure that has been very much needed. Now I think we're entering a stage where we need to be more tactical, more focused on BD to make sure that this thing gets adopted. And I think it will. It just, it's if you're building a product or a service that is at feature parity or better, it's it's pound for pound the same as a Web2 service. And then to your point, just the crypto plus components. You're never leading with a crypto, but you're just leading with it's better, it's the same or better, and then you have all these features. And I think that value prop should translate to the consumer, and there should be more uptake than what we currently have today. But it's expensive sometimes to acquire these customers. And by the way, I'm not suggesting you just airdrop and throw free money at users, because that also hasn't worked. There's a way to do this, and I don't think a lot of these campaigns, I think, will go down as really expensive customer acquisition, where you just give free tokens to people as a way to hook them. But again, the retention hasn't been as compelling in those kind of airdrop campaigns.
Mm. Over the past couple weeks, I've been thinking about how do you explain the need for crypto to someone such that their like sane mind can understand it and stay away from these very esoteric kinds of explanations. Um, on a related note, there was this interesting Matt Levine column that got me thinking when Robinhood allowed sports betting for the Super Bowl. And he was talking about sort of like the PR that Robinhood was doing for this and how this is part of their mission to democratize finance or something along those lines. And it's like, well, how is sports betting finance? Like it's gambling. And so when you talk about all of these sort of idle checking accounts that are doing nothing with their money, um, is the goal of democratizing finance to like get more people to buy treasuries, or does the end state look something like meme coins, or like put differently, like should we democratize finance? Like should people be investing themselves, or should is that actively kind of bad for people over a longer time horizon?
I mean, it's an excellent question. I think, we can go into and dive into how the educational system is incredibly broken. I mean, we don't teach people finance at school. We teach them all Shakespeare, but not how to manage their finances. And I think that I'm just being very realistic. Is that going to change? Unlikely. But I do think there is this opportunity to program money in a way that makes it easy for the consumer to express his intents of what he wants to accomplish with money. In the same way that when you onboard into a bank or with a private management or whatever, like they'll ask you a bunch of questions basically to understand your risk tolerance and your goals in life. If you're someone that is 20 is different than someone that is 40 or 60, if you have a family. And so just I think a basic understanding of like what your goals are, but then like translating that information into programmable money is, I think, really powerful to make money work for you. And I think I am very excited to see these next batch of projects that really integrate like AI agents. I know it's very overhyped, but truly like combining programmable money with kind of a money robot that basically is doing a lot of the work for you. The challenge and the opportunity is when you're interacting on chain, things can break. There's risks on chain, and just communicating that to the user is important. I think we learned the lessons last cycle where a lot of the aggregators like exchanges and wallets of the world were offering products with yield to consumers, and then like Terra that just blew up. And I think it's striking a balance between how much do you allow the customer to tap into these great financial primitives and products, understanding their level of competence and knowledge, to a point around democratization. Like if that user wants to and is sophisticated enough to use perps and leverage, go for it. I think there's like a proper set of questionnaires or tests that they can attest to make sure that they're competent enough, or at least sign off on the risks. Maybe your like 80-year-old grandma shouldn't be leveraging long 10x bonk. Maybe she's a great trader. I don't know. I'm not here to make those decisions, but I think as a whole, like if you look at just a normal distribution of a population, I think there's just so much that the promise of NASDAQ on the blockchain is intact. And I think the opportunity at large is that massive part of the bell curve that doesn't know how to manage their finances, is likely never going to take much interest. But I think not assuming that that's going to change, the part that really does is that the financial system is very antiquated, hasn't really caught up. Like no one ever has said, I love logging into my bank account. It produces a seamless experience. It's like Amazon. It's like Netflix. Like no one has, I have never heard someone say that. Maybe on the margin, it's like, oh, wow, these like Revolut is so much easier than my traditional bank. It's all like on a relative basis, but as a whole, no one like raves about like the NPS of their bank account is like, it's like not high. And there's a reason for that. The financial system is broken. It's a patchwork of systems that don't communicate with each other, take time to settle. There's not a lot of transparency in what's going on. The relationship that you have with your bank is not particularly like an intimate one. But I think we can do so much better. And I think that I'm not dismissive of like innovation on the frontier, gaming. There's so many different use cases, non-skeuomorphic, to use a Chris Dixon term, that will grow up and be, crop up in this industry. But just the idea of transforming finance is so powerful. And the most exciting thing is you're already seeing it live. Stripe acquired Bridge. They realized that in order for them to increase their next leg of growth has to happen through stablecoins. Nubank in Brazil is offering, they've always kind of had a crypto offering in their wallet. They even had a token that went nowhere, like goes down only. But USDC is now the asset that most of their consumers using their crypto product are buying. It's not Bitcoin, it's not Ethereum, it's not Solana, it's USDC. And like, if we just stop there, that's like a massive, massive improvement for billions of people. We have 30 to 60 million people on chain today, actively. Just like, that's the opportunity.
Mm-hmm. Yeah, I like that piece, and I especially like the pitch of all these banks have systems that don't work together. Like, I think that, especially coming from like a Solana bias, that's kind of the very obvious pitch you can make.
Yeah.
Speaking of Solana, Santi, we've established a couple minutes ago that you're a Tron super fan.
God, I'm gonna be cooked on the timeline for that, right? I love it.
But you've been on a bit of a journey with Solana over time and have come to admire it publicly. So I'm just curious to get you to expand a little bit on your own journey intellectually with Solana, and where do you see the network going from here?
Absolutely. I wasn't the first one to discover Solana, much to my demise. I always want to be the first and early, but sometimes you're not. And I think Solana has been, at least for me as a personal journey in my investing, and my evolution as an investor is really updating my thesis in real time and in the open to invite criticism. It is now the main way that I go about validating theses or invalidating them. I'm not afraid to look like an idiot. I'm not afraid, and I think for me, Solana was, I'd learned about it going to meetups in San Francisco in their office way back in the day. For me, it was, there was some skepticism because you would come out, like there was just so many projects claiming high throughput, like, and it was the Definities of the world and so many other projects like Hashgraphs, and all. It was like late in that batch. And so there is some scar tissue that I think you should always kind of like revisit and try to remove from your system to allow you to capture new things. It's sort of this, like, because it didn't work before doesn't mean that it can't work today. And I think that was my fault way back in the day, like when Solana was first incubated and launched, But thankfully, I was an early investor in Multicoin. I really like Tushar and Kyle's approach, and I said, "Hey, they're going to capture alpha that I am not as an investor. They just think differently. They're going to see so." And so from that, by virtue of being an investor in their fund and then being early, I started learning about Solana. And then at Parify, we built we were early investors as well in that kind of round that they did, more institutional. But it was still very early on. And we at the time invested in a number of projects in the Solana ecosystem, like Solflare and a money market, not Camino, but another. And then Parify is a firm. I'm no longer there. It's very actively. It's been great kind of seeing their interest and how that portfolio has evolved from being, I think, like very much a lot of crypto funds and investors that have been around for a while, like very Ethereum centric, to more Solana. And so anyways, to fast forward to today, it was really the better part of like the last 24 months where post FTX became much more interesting, started looking at it much, much more, seeing the evolution of Lightspeed, and then really just updating my position where one day I just was like, there is no fundamentally, there was just like one day I said, fundamentally, there is no reason, in my opinion, that Solana should not be at parity with Ethereum today. And so I basically I don't know an ETH today. I have a lot of exposure to the Ethereum ecosystem by virtue of my venture investments. I think Ethereum has a place in the world. I want to just preface by all of what I'm going to say by saying that I still believe and I still am interested in, there's a lot of bright minds in the Ethereum ecosystem, as is there in other ecosystems. But for me, as an investor, I updated my my thinking. And it was really at a time, and still is, I think, that most investors still kind of skeptical of what may be happening in Solana. And it's just sort of how, as an investor, you always want to be right early and then assume that the consensus will be such that within a reasonable time frame, what you believe today will be right, but you can't be too far out. And for me, like sitting back then and certainly today, across the board, all the metrics that you see in Solana in terms of, capital efficiency, users, projects, it's just in my mind, it's just the place where a lot of the activity is happening. And so when you look at that and then you compare the valuation, it's, for me, just there is still a big mismatch there. And that's the things that I think as an investor, you get really excited about.
Today's episode is brought to you by TurboTax Calculator. Accurate crypto taxes, no guesswork. Get accurate CPA-endorsed tax reports with full support for IRS rules. With more than 3,000 integrations, TurboTax Calculator supports all of your wallets, exchanges, and on-chain activity. And you can import directly to TurboTax or H&R Block, or share securely with your accountant. You can use our exclusive discount code BW2025 to enjoy 30% off all paid TurboTax Calculator plans. That's BW2025 for 30% off. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. I actually want to do a quick aside here, which is that something I'm curious to ask you about as someone who came from TradFi and then was sort of maybe earlier on getting into just like the crypto investment side of things. How do you think about risk as a crypto investor? Because I think one of the points that maybe TradFi would always mark against crypto is that it's too risky. And clearly, to be a crypto investor professionally, you have to have a high risk tolerance. So I'm just curious to hear you kind of walk us through how you think about that.
Oh yeah, I mean it's one of those things that you hear about a lot, but no one really cares to unpack it. It's a very personal question too. What is risk? I mean, when someone says that something is risky, is because they probably don't have a fine understanding, or they either have a very precise understanding of what they're talking about, or they have zero understanding. Most of the time, it's people who have zero understanding that are telling you from the outside in, Jack, you're dedicating your career to crypto, and you have a lot of your net worth, maybe or maybe not, tied to crypto. That's extremely risky. And you're like, is it? Because for me, like, I'll think about this, how I think about it. I understand this space. I think that I have an edge in this space. I've been here for a long time. I'm seeing in real time. I'm monitoring it very closely. It is less risky for me actually to be here than to go out and try to build a diverse portfolio and invest in AI and invest in all their stuff. And I have no edge there. I don't understand it. Now there's something to be said about, put your money in the S&P 500, let it ride for the next 20 years, let the rebalancing work its magic. You'll capture mega trends and go back to work and whatever it is that you love. You hear some of the best and brightest fund managers, investors say, listen, it's really hard to outperform a benchmark like the S&P and the NASDAQ, maybe the S&P, but risk is a very dynamic question. I think it is a very personal one. If you're paying attention to an industry, if you're deep in the weeds, then that carries less risk. You understand it. And so you should lean into that, right? The thing that in my personal journey has been a big unlock was the putting money aside outside of this industry to a point where it sort of cleared my mind of, okay, if something were to happen with this industry, if all of this were to go to zero, I still can survive. I have plenty of runway for multiple years to just figure it out. And when I did that, I became far more focused, and allowed me to take more risk, like really lean on, so to speak. When I say risk, you can think about like duration risk. Like if you're investing in pure venture, these are positions that may take 10 years to come into fruition. You have to be patient. You can't invest maybe if you have like lifestyle needs, cash flow needs, and you're going out and having like the illiquidity mismatch kills you, right? If you're investing here in this tech, you better believe that you should be patient, and you want to be patient for the next 5-10 years. But if you're putting all your money in stuff that may not be liquid, you may not be able to touch, then it just positions you to perhaps be a forced seller. When the market goes down, you're going to panic because you just feel that pinch more. And so I think it's one of those things where it's a very personal question. Optimize for mental clarity. Just assume that the asset can be volatile. It can be up and down 90%. And how are you, like, go through that motion, say, okay, if this asset goes down 90%, where will I be psychologically? Will I be panicking and wanting to sell because I need to cover rent, or I need to cover all these different expenses? And if the answer to all that is no, then I think you're doing something right. You're managing risk correctly. So, and then as a parting maybe question is sort of, if you don't understand where the yield's coming from, like you are most likely the yield, and the lessons that I think you learn in crypto is, when prices go up, it's all right. But like my operating assumption is I'm not going to capture 80% of the returns of a cycle. I'm happy if I capture 50, because I think that just psychologically I'm going in there saying, I want to preserve capital. I want to make sure that I can invest in the next batch of projects. I need to have capital to have that. I want to have capital when no one else has. And time again, you just see in these severe drawdowns where you want to be investing, like you wanted to be investing after FTX, and you wanted to be investing in those batch of cohort, like projects like Tensor and Camino, and a lot of these kind of startups that ended up raising money post FTX. The valuations then were far different than when they are now. And so problem is everyone was either panicking, had exited, or had no money to deploy. And I think it never hurts to have some cash. Just like the two best investors that have helped me understand risk and how to think about it have been George Soros. I guess three. George Soros, The Alchemy of Finance is a fantastic book. Go read it. He talks about reflexivity. Markets are very psychological. That is very true in crypto. Howard Marks, founder of Oaktree, he has free memos that you can subscribe to. He also has a book called The Most Important Thing. Go read all of his memos, all of his like YouTube interviews. Fantastic. Like he is just a fantastic thinker. More conservative, but it just helps you understand his frameworks. And then perhaps the third is Stan Druckenmiller, who I believe worked at Soros, now has his own family office. And he's very in tune with the idea of changing your mind quickly, and putting on positions, doing more work, but not being afraid to change your mind and adapting to that. And I think like the combination of those three like different thinkers is probably like the thing that has really helped me understand and manage risk. I'm not proclaiming to be an expert. We all make mistakes. But yeah, I think the two last things I'll say is thinking probabilities. Go through different scenarios. It forces you to entertain outcomes and entertain new information that may totally invalidate your thesis, and invert and say, hey, what would make me invalidate my thesis of what I just said about Solana, of flipping Ethereum or becoming the main chain? Like what in here can really invalidate it? What are those edge cases that can blow up? And I think if you do that, and it's not a binary kind of exercise, it's a constant evolution. And the best thing about this industry is you can monitor and manage risk in real time programmatically. Everything's on chain. You're not waiting for a earnings report every quarter or every 6 months to understand KPIs and activity. Like, you are seeing activity in real time. That is just like blows my mind still to this day, that you can in real time look at what's going on in these money markets and look at Camino's dashboards. I'm an investor there, but like their dashboards are amazing. Like, you're never going to get that level of information of your bank or counterparty in finance. Like, liquidations happening on chain, like all of that. It's just like amazing, you know?
How do you think about that? First of all, that's a great answer. I was a quick aside, and we got like a comprehensive, overview. So thank
Sorry,
you. But no, that was actually really fascinating. There's like the financial risk side of this. I guess when you talk to projects you've invested in, or I don't know, people you work with, I think one of the big questions is you're in a bull market and there's all this growth to be had for, say, listeners to this show who are building businesses, or I don't know, people who are looking to break into crypto and things like this. And one trend you tend to see is maybe a company way over hires in the bull market, or it takes on some kind of risky business line that doesn't end up working out. So just more on the business rather than the investing side of it. How do you think about which risks are tolerable in crypto and which opportunities should be left on the table?
Yeah, I'll fire off quick things. One, always act with integrity and your users' interest, and like, full stop. Like, just if it doesn't feel right, it's probably not right. And no one ever got hurt by acting conservatively when it comes to protecting users and acting in the best interest of the user base. That should always be top of mind. And that's, go read Amazon's like the Everything Store and Jeff Bezos' memos. It's the customer is always first. So that should always be, from first principles, like the most important thing. The other component is understanding the things you can control and the things you can't control. And I think that's probably the best when it comes to actually, how do you manage risk? Well, there are many things that you can't control. You can't control the market. You can't control the capital markets, meaning, can you raise money? Is it going to be available? You can't control in building a product that people love. You can't control the way you go about doing that, which is, so many times I meet wonderful, brilliant minds and I ask them, how many customers did you talk to validate your hypothesis? Like, well, no, I'm obsessed about this problem. Like, I understand that. I agree with you, but do you have paying customers on the back end? Who are those paying customers? Have you gone and talked to them? And if the answer is no, I won't invest, because it doesn't cost anything to pick up the phone and say, hey, I think this is broken. If I went and built it, would you buy it? And if you hear constant yeses, then yeah, go in. I'll put in as much money into that as possible. And so that's something that you can do to really mitigate risk, which is building something that you already know people are going to use. Like, just go read Elad Gil's growth handbook to just give you a really good like blueprint of how go and build in the open and build fast, but always talk to your customer. And the nice thing about crypto is people will scream at you what they want. Now, it doesn't necessarily mean the people that are screaming are representative of what you should be building, but it's at least a signal. And the last and perhaps most important thing is controlling your costs. I mean, I hate going to conferences sometimes because I see the amount of wasteful spending. I'm like, do you really think that spending $100,000 on this event is going to be the best customer acquisition, best use of funds? You best believe the answer is no to that. 9 out of 10, 10 out of 10. I mean, I never want to short in crypto, but I almost want to short every company that is a title sponsor and spending lavishly in these conferences, because you just seen how extreme it can be. And that money does not last. No one ever said, oh, this very few protocols or companies that I've interacted with, most never say, oh, this round really lasted me so much more than I would have thought. Most of the times it's like, wow, that 25 million really went by fast. I'm like, yeah, you threw a body of problems and you thought that you would be able to raise another 50 million. You can always control costs. Like, I mean, Amazon, I love Founders Podcasts. Go and listen to every episode I have. They're amazing. The common denominator of some of the more successful companies and entrepreneurs is they all had near death experiences in terms like Amazon, weeks of going bankrupt, weeks before the dot-com market collapsed, they were able to stitch together a round. Had they not done that, they would have died. Go read the Musk biography or the founder's podcast on Musk and SpaceX and Tesla. It was like meeting bankroll was like he was on the wire, like so close to being bankrupt. Manage your costs, be conservative, and I think hire only hire A's. A's hire A's, B's hire C's. If you hire a B, you're signing your path to death. Why? Because B feels threatened, so we'll hire someone that is inferior. A's always feel that they want to bring in smarter people, and I think that is extremely important, especially so when you're like the first 5 hires, the first 10. I'm going through this now. I'm building a team, and I'm willing to take more time to find the right person, because it is just so important. And I've heard it from so many different startups, which is it's always like there's always one that killer engineer that you can't live without. It's like, yeah, that guy, it produces more output than the rest of the engineers in the team, and they'll never say it publicly, but I've just heard it many times. Find that engineer for you, that head of growth, and I think it's how it's how your probability of success probably goes much higher, and will position you, particularly in crypto, where we don't understand really who the customer is today. I mean, there's very little. The user of today is not going to be the user when we hit mainstream adoption. But all you can be is control your destiny by managing your costs and be there with good tech and a good team, paying attention, and building faster and shipping faster products that users will scream at you in the Discord, especially as we see more onboarding events. And I think if you're there, the only way to win in open source land is by being faster than everyone else, or actually surviving.
Speaking of you building your team, I'm curious to ask, I remember a few months ago, you tweeted that you're looking to essentially acquire businesses and then add crypto rails rather than convincing existing businesses to do it. How's that experiment been going?
Oh, it's alive and well. Yeah, I'll be doing more announcements, particularly in DAS, but it's been a wonderful journey because everyone that I've talked to believes in the mission, believes in the problem, is inspired by the task at hand, which is building a better funnel and onboarding hundreds of millions of users. I don't want to wait another 12 years. I want to do it now. We can do it now. The tech is ready. I'm sure that we will stress test it, but the tech is ready. The Trump onboarding event is showing you that it very much can be. There's a long road to get there, but I think that leading with a killer product that abstracts away crypto. I'm not leading with crypto. The playbook we just talked about with DePIN and stablecoins, that's what I'm doing. And concretely, it's just been very exciting to meet, being on the other side. I mean, not an investor, but a builder, has been very rewarding. It's one of those things there. I just woke up one day and said, if I don't do this, I wouldn't be able to live with myself. It's just given a whole dimension of meaning. And I think it's where I can have the most amount of impact to this industry. I'm acutely aware of the things that I think I'm good at, the things that I'm not good at all. But really in this capital, in this fundraising process, it's been very encouraging to meet a certain set of investors that it really is a partnership. And the conversations with them have been, listen, you're asking very thoughtful questions. I don't pretend to have the answer to 9 out of 10 of these. Let's keep them top of mind. And I'm bringing you in not because I want you to help me find answers to those questions. And it's a very humbling experience too. It's just it's a new kind of venturing into a new area. And also I've been vocal about it. I've been public about it. But I'm very comfortable with having very few things very clear and believing that this, if done correctly, can probably have the most amount of impact, at least in the way that I can do it for this industry, which is I want to 10x the number of active users on chain. And I want to do it as quickly as possible. And I think, we can go out and acquire large businesses and do that. And if at that point it doesn't work, then I think it just maybe is maybe it just invalidates a lot of the things that I've been talking about in this podcast, which is maybe this is not the future of finance, or maybe DePIN is not going to work. And maybe the tokenomics of DePIN projects need to change. Like, there's a whole set of discussion that we can have about why DePIN really hasn't broken out as a category. I think a lot of that is in the tokenomics. It's something that I'm thinking about actively, of how to construct DePIN networks with the right set of tokenomics. As a teaser, I think there's a way that DePIN projects can really scale within industrial, or like more at scale partners that are motivated to deploy hotspots. Like, the evolution of Bitcoin miners went from small mom and pop shops to now you have industrial grade farms. The evolution, I think, of the deployment of DePIN can happen at a more business, like B2B standpoint, where you go to large businesses. If you're Andrina, you go to folks like us that want to roll out a hotspot network in a particular country. And I think the combination of owning a business that can cut costs, again, control costs with DePIN, is very real. No one has done it, but I want to be the first to really show the world that you can take an existing business, swap out old infrastructure, and replace it with crypto rails, and that alone, without assuming that the consumer is going to change anything. Again, never assume that the consumer will change anything. Just by doing that alone, you can meaningfully cut costs for a business. And I think that's what gets me really excited, which is we have the sector that we want to go after. We have a set of companies that we're actively looking at to acquire. And I think the opportunity is very much there. And so I can't share what that company is, but it's not small. And I guess some people have, there have been a few people that have said, why do you want to do this with a big business? Like, start small. I'm like, the fuck, I'm going to start small. Why would I? The level of effort is exactly the same for a small business, a $10 million business, than it is for a $100 million business and for a $1 billion business. In fact, there's more fat at a $1 billion business. So what? And by the way, you have, 100 users, a couple million users, or like 25 to 75 to 100 million users. Like, how much you want? Like, you either, in that question is, you either believe the tech is not ready, or the strategy is not there, or I'm not the right person to do it. And I can understand you might think that I'm not the right person to do it. Totally get it. Say it to my face, or don't say it. But then, if you don't believe the tech is ready, then just, I certainly do. I don't think that this was the case 4 years ago. But just tying it all together, Solana's come a long way in these 4 years. Other high throughput blockchains have come such a long way. Solana, by far, pound for pound, is farthest along. And you look at these, every time I look at the Trump, like what just happened with the Trump onboarding event, it validates everything of what I'm doing. It just sort of solidifies the opportunity at hand, which is there's a lot of interest. I think there's a lot of the tech is ready. The projects and products are there. We just need to lead it with a less traumatic experience. And then they'll do all the rest. I mean, they'll some of them will stick around. Some of them will do other stuff. It's easy to interact on chain. And when I say that, it's like, it's easy to move, money moves at the speed of light. Younger generations really get it. It's hard to imagine a world where that doesn't continue to grow, because it's like how Tencent dominated China. It just became the everything app. Web3, crypto, however you want to call it, will be that for the rest of the world. I very much believe it. Things work faster, better, cheaper. We just need to tweak how we lead and how we kind of capture users. And that will benefit. Certainly, like, people talk about, like, Solana is very, it's like the fastest horse. But, if you onboard another 100, 200 million users, I do believe that, a rising tide lifts all boats. And at that point, it will become very clear the chains that can actually support mainstream adoption. Right now we're in a state of the world where everyone's arguing about TPS and all these different abstract KPIs that you're not really stress testing. Certainly, like the Trump event is very real and concrete data to support, hey, Nasdaq on the blockchain, like, yeah, we're coming close to like volumes in Nasdaq, or a weekend, like, can happen. But the storytelling has been very important in this industry and still will always be, like, from a go-to-market standpoint. But yeah, it'd just be really interesting in a world where we have 200, 300, 400, a billion users on chain. I believe in a multi-chain world, and I believe that it will become very clear which chains can actually support that. And I think Solana is one of them.
Okay, final question for you, Santi. One way to build a business is to come up with a really good idea no one's thought of yet. As you've mentioned, another way to build a business is to revive an old idea that was a little too early or just didn't work the last time. So give us one idea that you think maybe came from a prior crypto cycle and hasn't quite worked yet, and you think another really good attempt at it could help it break through.
I'm going to cheat here while I buy time. The one that really has worked is Polymarket. Like, Augur didn't work in 2017. We didn't have a stable coin, which was essential to settle the market. And Polymarket came around. You had stable coins, and obviously it benefited from, coincided with presidential election and a lot of interest. Now sports is really taking off in Polymarket, but it was like a hallmark of didn't work, Augur didn't work, Polymarket can't work. And at Parify, we invested in both. And like that was, I think now, yeah, I mean, it's a great question. There are categories that have been left for dead. The first one that comes to mind is gaming. There was just the play to earn stuff. I think really jaded people from, hey, gaming's never going to work on chain. And it goes back to I think it will work. But the cohort of games that you're seeing now are actually games. Like, they're fun to play. Like Gunzilla, for instance, is one of those games, and I'm an investor. It's like, you talk to most of the users and they'll be like, oh no, like, what is this crypto thing? And it was just a fun game. Like, it's a shooter game. Like, we love playing this game. And then, but then of course, like, if you want to claim rewards, if you want to do these extra stuff, like, you get rewarded for all this stuff. Like, there's just something so powerful about that. But gaming is still very much like a category that people don't like. People lost a lot of money on, some projects are left for dead. They take a long time to build. Like, really cool games take a long time to build. And also you got to like also overlay that with the gaming industry as a whole, not just in crypto, has been really in a hard spot. Like, the only really blockbuster games, like, they're very concentrated. The half-life of users is like the challenges of the gaming industry. We talk about like retention and half-life of meme coins. Like, go look at like what the chart looks like for Candy Crush or Angry Birds, or, if you're not Call of Duty or World of Warcraft or like Wizarding World, that you had these great franchises and like tons of resources. Yeah. Go look at the Zynga stock. Looks like your meme coin stock or altcoin. It's challenging, right? So I think it's just, again, it's one of those things where, as a category, I think it's been very out of favor. It will come back, for sure. Like, but yeah, the other one maybe on the margin is like perps have really worked. Option protocols per se haven't necessarily, but in high throughput environments, I think it's really. And I'll have to maybe on a future episode, but also for your listeners, like, I think the parting question would be like, okay, you have these high throughput environments that allow for lower costs that have radically, whenever you reduce costs by an order of magnitude or two, it unlocks like nonlinear behavior, particularly consumer behavior. Like, you saw that in Solana, right? The Phantom user very different than the MetaMask user. The amount of on-chain interactions, the capital efficiency, TVL stop being the most important metric. It was, what is the capital efficiency of that? What is the velocity of that? And I think that's just, it was seeing that as like the type of things that really unlock like this huge interest and spur of activity on chain. I think we'll see that in other things. I will caution, some things are just not going to happen. What I mean?
Yes. Just because it's old doesn't mean it will work. Yes.
Correct. Yeah, it's a tricky one, but I think there's like a graveyard, quote unquote, of things that are worth revisiting, and really maybe diagnosing like, why didn't it work? And a lot of times it's, hey, just the tech wasn't ready. but
Mhm.
the tech is very much ready today, I think.
Yeah. Yeah. Spend some time digging in the graveyard. But
Yeah.
Santi, we're going to end it there. But
Okay.
thank you so much for coming on the show. It's been really enlightening and just a fun
Thank you.
conversation.
Yeah, no, Jack. I mean, I always love coming on here. I think I'm helping you guys have Lightspeed really overtake Empire, and if I've done that here, great, because I win-win. But no, really good conversation, and thank you for the time.
Yeah, thanks for playing for the rival team for a game. We'll catch you in the next one, and go check out Empire. Yeah.
Yeah, for sure.
All right. Take care.